my goodness, my friends. I'm absolutely bursting with excitement to share this explosive business bombshell that has massive implications for the rich, famous, and royal. Soho House, yes, the Soho House, playground of the elite and the very spot where Meghan Markle's fairy tale romance with Prince Harry began, has just gone completely private in a stunning $2.7 billion deal that has the business world absolutely shook. Now, I know you guys are excited for more one. But before we delve into further discussion, if you haven't subscribed, come on guys, what are you waiting for? Hit like, subscribe, and ring that notification bell ASAP. So now, this isn't just some boring corporate reshuffling, my dear friends. This is a seismic shift that will fundamentally transform how one of the world's most exclusive clubs operates, protects its celebrity members, and shields its secrets from prying eyes. And trust me, as someone who's been watching the intersection of business, royalty, and celebrity for decades, this move is far more calculated and significant than they want you to believe. Let me break this down for you in a way that exposes what's really happening behind those velvet ropes and mahogany doors. Soho House, the ultra-exclusive members club where annual fees start at thousands of dollars, and where celebrities, royals, and power brokers mingle away from the public eye, has been purchased by an investor group led by MCR Hotels for a jaw-dropping $2.7 billion. But the price tag isn't what makes this deal so fascinating. It's the deliberate strategy to take this high-profile company completely private after years of public trading. Why does this matter so dramatically? Because going private means Soho House can now operate in near complete secrecy. No more public financial disclosures. No more shareholder meetings. No more quarterly earnings reports that reveal membership numbers, revenue struggles, or executive decisions. This exclusive playground for the elite has essentially pulled a massive, billionaire-backed curtain around its entire operation at a time when transparency is supposedly the standard for major businesses. Think about the timing of this move. In an era when celebrities and royals face unprecedented scrutiny, when social media exposes every misstep, when eat the rich sentiments are growing globally, Soho House has secured the ultimate luxury, privacy. This isn't just a business decision, it's a calculated move to protect its most valuable asset, the secrets, conversations, and behaviors of its high-profile members. For Meghan Markle, this shift has particular significance. The Duchess of Sussex has a deep personal connection to Soho House, as it was the very venue where she and Prince Harry had their second date, forever cementing the club in royal history. Sources close to the couple have long suggested that Soho House became something of a sanctuary for them during their courtship, a rare space where they could meet without the glare of paparazzi lenses or royal watchers. But Meghan's connection to Soho House goes beyond just a romantic meetup spot. Her close friend Marcus Anderson is a high-ranking Soho House executive who reportedly played matchmaker for the royal couple. The private members club has been woven into the Sussex narrative in ways that few other commercial establishments can claim. And now, that very institution has secured a level of privacy that mirrors what Harry and Meghan themselves have desperately sought since their relationship began. The implications of this privatization are staggering when you consider how Soho House operates. As a public company, any scandals involving high-profile members potentially affected stock prices. Imagine the scenario: a royal family member misbehaves at a Soho House location, word leaks to the press, and suddenly shareholders are demanding answers about how such an incident could affect the brand's reputation and bottom line. Now, those same incidents can be handled with absolute discretion, with no obligation to inform anyone outside a tiny circle of private investors. This cloak of secrecy extends to every aspect of the business. Struggling membership numbers during economic downturns? Private. Staff layoffs at various locations? Private. Complaints about service quality or issues with celebrity members? Completely private. The company can now make dramatic operational changes, adjust its strategy, or even quietly close underperforming locations without triggering the kind of public scrutiny that often accompanies such moves for publicly traded companies. For a brand built entirely on exclusivity and the promise of privacy, this return to private ownership represents a return to its core values. Soho House has always sold more than just membership. It sells the illusion of belonging to an elite circle, the promise of brushing shoulders with the powerful, and the guarantee of discretion. Public trading, with its demands for transparency and growth, was fundamentally at odds with these founding principles. But let's be honest about what this move really signals. Soho House is battening down the hatches at a time when elite privilege is increasingly questioned. The timing couldn't be more significant. In an era when billionaires face mounting criticism, when wealth inequality dominates political discourse, and when exclusive institutions are called to justify their existence, Soho House has effectively removed itself from public accountability altogether. This strategic retreat from public scrutiny also shields Soho House from revealing potentially embarrassing financial realities. Since its IPO in 2021, the company's stock had underperformed expectations, leading some financial analysts to question the sustainability of its business model. Going private neatly sidesteps these concerns, allowing management to restructure, reimagine, or even dramatically downsize operations without the quarterly performance pressure that comes with public trading. The most fascinating aspect of this $2.7 billion deal is what it reveals about the value of privacy in today's world. Think about it. In an age when data is considered the new oil, when most companies are mining every aspect of consumer behavior for profit, Soho House is moving in the opposite direction. They're essentially saying that secrecy itself is their most valuable commodity, worth billions to protect and preserve. For members like Meghan Markle and Prince Harry, who've waged a very public battle for privacy since their relationship began, this move must feel like vindication. It's as if one of their favorite institutions is validating their own stance. That privacy isn't just a personal preference, but a business necessity for certain operations to thrive in today's hyper-exposed world. The implications extend far beyond just one luxury members club. This massive deal signals a potential trend of high-profile businesses retreating from public markets, specifically to shield themselves from the transparency demands of our current era. When a brand's value is built on exclusivity, mystery, and catering to the ultra-wealthy, perhaps the public markets, with their demands for growth, disclosure, and accountability, are fundamentally incompatible. Consider what this means for the future relationship between the elite and the public. As more luxury brands and exclusive services potentially follow Soho House's lead, we could be witnessing the creation of a two-tiered information system: transparent businesses serving the masses, and private, secretive operations catering to the privileged few who can afford to pay for discretion. The irony isn't lost on those who follow both business and celebrity culture. At a time when social media has democratized fame, and when ordinary people demand more authenticity from public figures, the ultra-elite are responding not by becoming more transparent, but by creating even more sophisticated shields against public scrutiny. Soho House's privatization is the corporate embodiment of the VIP room within the VIP room, an exclusive space becoming even more exclusive. For Meghan Markle, who has navigated the treacherous waters between public persona and private individual, this move by a brand so closely associated with her personal history must resonate deeply. The Duchess has repeatedly spoken about the toll that public scrutiny took on her mental health, famously telling Oprah Winfrey about the suffocating nature of royal life. Now one of her favorite haunts has secured for itself the very thing she sought: protection from the constant demands for transparency and access. The business implications of this deal extend far beyond just Soho House. This massive acquisition signals confidence in the luxury hospitality sector despite economic uncertainties, suggesting that catering to the ultra-wealthy remains a resilient business model, even in turbulent times. It also indicates that private equity sees tremendous value in businesses that can maintain exclusivity and mystique in an era of oversharing and overexposure. What remains to be seen is how this newly private Soho House will evolve. Without the pressure of quarterly earnings reports and shareholder expectations, will it double down on exclusivity, potentially raising prices and becoming even more selective about membership? Or Will it use this freedom to take creative risks, expanding into new markets or concepts that might have been too experimental for a public company concerned with steady growth? The $2.7 billion question is whether this retreat from public scrutiny will ultimately strengthen or weaken Soho House's cultural cachet. For decades, the allure of Soho House was not just its exclusivity, but the mythology around what happened inside. The deals made, the relationships formed, the creative collaborations sparked. Now that it's shielded from public reporting requirements, will that mythology grow even stronger? Or will the lack of transparency eventually diminish its relevance in a world that increasingly values authenticity? For members like Meghan Markle and other high-profile figures who value Soho House precisely because it offers refuge from public scrutiny, this move likely comes as a relief. The spaces where they can truly relax away from prying eyes are vanishingly rare, and the privatization of Soho House helps ensure that one such sanctuary remains intact. But for the rest of us, this massive deal represents another step in the growing division between the ultra-elite and everyone else. Not just in terms of access to luxury, but access to information itself. As more exclusive brands potentially follow Soho House's lead in retreating from public markets, we may be witnessing the creation of an entirely separate ecosystem for the wealthy, one that operates according to different rules and with different levels of accountability than the businesses serving ordinary consumers. In a world obsessed with transparency, Soho House has made secrecy itself a luxury good, one worth billions to acquire and protect. And that, my friends, may be the most revealing aspect of this entire spectacular deal. The recognition that in our overexposed age, privacy has become the ultimate status symbol, available only to those who can afford to buy it. Ta-ta, and bye for now.